Sounds good. I think we'll just get started. I'm just going to do a quick intro here before turning it over. So thank you very much, everyone, for being here today, taking some time out of your very busy schedules. This is a very, very important topic and something that's on everyone's mind as we think about what resources are available to the local business community in Fremont and the greater Tri-City area. So I'd like to first, just welcome everyone from the city of Fremont, but I also understand that we have folks here from the city of Newark, the Newark Chamber, as well as Union City. So thank you and welcome. I also just want to thank really quick the Chamber for helping put this together. You guys have just been an amazing partner during this hard time, and if people didn't know the value of what you guys do for the community, I think it's become that much more clear during this period of this challenging period. So
thank you.
So before, the last couple of weeks, maybe a lot of folks weren't actually that familiar with the Small Business Administration, and if they weren't, they probably are now. And but just in case you still are unfamiliar, the Small Business Administration is a department within the federal government that provides supportive services and funding for small businesses and entrepreneurs. And there are a couple of programs that we want to touch upon today. We are very fortunate to be joined by Noah Broad, who is with the San Francisco District Small Business Administration Office, as well as Susheel Kumar, who is a Public Information Officer for the Western Region SBA Office of Disaster Assistance. So
I think we're getting him in as well, actually. I think he's had some trouble joining.
Oh, okay.
I just sent him the Zoom invite link, so maybe that'll do it.
Okay. Let's hope we can get him in here. While we're waiting, I'd love to turn it over to you, Noah, and if you could just kind of give us, a quick overview of the SBA and the local district, some of the work that you're doing, and then we can jump right into the CARES Act and some of the really exciting stuff that's come out of that.
Yeah, for sure. Thanks, Donovan. So yeah, my name is Noah Broad. I'm at the San Francisco District Office of the U.S. Small Business Administration. So the district office is the local resource for the federal agency that is the Small Business Administration. And some of the work that I do includes doing all the outreach and discussion about our programs and connecting business owners to resources in non-coronavirus times that help them start their business, grow, and expand that business. And then during disaster situations, connecting them to our disaster recovery and in this particular situation, survival programs is almost what I want to call them. And that's mostly what I'm going to be talking about today right here, really. The programs that a lot of people have been hearing about. When we get Susheel on, I'm going to defer to him for one of those major programs. But there's another program that launched this morning that I'll talk about. And he just sent me a message. Susheel says he had to call in and he's on mute. So maybe he's on the participant list. Let's see if I can.
I was muted. I think he can unmute himself.
Maybe it's because he's on the phone line. He might not have.
Oh, okay.
Hi guys.
In front of him.
Hi guys.
Is that Susheel?
It is.
Okay.
Hey, welcome. All right, so he's our, I think the 916 number.
That's correct. 878-1495.
Yeah, there he is. Okay. How you doing, Susheel?
Fine, thank you, sir. The Zoom's not working.
Okay. Well, I just introduced myself, so you're perfect. Right on time. And so actually, I'll hand it over to you. You got some, folks here watching the presentation, and I'll hand it over to you just to introduce yourself a little bit and talk about the Office of Disaster Assistance.
Perfect. My name is Susheel Kumar. I'm the Public Information Officer for the Small Business Administration. I appreciate the opportunity to talk with you folks about economic injury. Is this the time where we start the presentation, Noah, or is this just brief introduction?
Just brief introduction. I'll give it to you here back in just a second.
Okay.
Okay, so what I'll start off with is the Paycheck Protection Program, since that's kind of the hot item of the day. We'll keep the headlines up front. And so I'm sharing my desktop, sharing a screen here. I'll kind of go through this quick, but really I'll go kind of give the overview and then hand it off to Susheel, and then we'll just take questions, because I found that to be some of the most informative, useful way to talk about this. Just take questions from folks as they come in. I'm going to be talking about the Paycheck Protection Program, and this is the caveat that I give every day now, which is anything I say is time-stamped. The CARES Act passed last Friday, and that legislation is being implemented and enacted in real time at a speed and pace pretty much unseen and heard of before in a government time. All throughout this week, we've been getting updates and new policies and revisions to policies, and there's active rulemaking that is happening. So anytime I'm talking about the CARES Act, it is time-stamped, in terms of what is known and what are the rules at the time of the presentation. That's going to stabilize here over the next few days, but it's been especially true this week. And the headlines about some of the programs and some of the assistance that were enabled by the CARES Act, but also by the existing authority offered to SBA to serve and help businesses during the shutdowns. There's about 4 or 5 different programs that have actually been rolled out, or different policy changes that have been rolled out to support business owners. One is that if you have existing SBA loans or debt, whether it's the 7A, 504, or microloan programs, we early on made a decision as an agency to implement a debt deferment or relief program. So SBA is paying the principal and interest of existing debt and new regular loans that were made under the SBA at this time for the next 6 months. And that's just the program that was activated and turned on, and there was some immediate relief that we were able to offer to existing debt holders through any of the SBA kind of standard bread and butter programs that run during non-disaster times. And then there's also, in terms of like our regular toolbox, there are express bridge loans, which are there to kind of provide quick financing while people are waiting for a response from our disaster office on their loan application. And that's up to $25,000. And there's a subset of lenders that participate in that program that I can share with Donovan to go out after the meeting. And the Paycheck Protection Program I'll talk about, and the Economic Injury Disaster Loan advance, I'll hand that over to Susheel in a little bit to chat about. So for the Paycheck Protection Program, this program went live as of this morning. So this is kind of hot off the presses. And by went live, it means that SBA opened up, as an agency, we are now allowing lenders to take applications for this program and submit them to SBA. The main thing to, when we're doing the 10,000-foot view of this program, one is kind of that how is this program delivered and how is it accessed, which is a common question I get. And for this program, it is delivered through existing banking partners of the SBA. So, you know, if you went to your lender who you work with now, or your bank that you work with now, they may be the ones that participate in the SBA program, but it's delivered through commercial banks and credit unions. SBA doesn't require that that you be an existing client of one of the banks or credit unions that are dispersing this program. I have heard in conversations with business owners that some banks, because they're getting a lot of calls about it, at this time they're only extending it to their existing clients. That's not a requirement that comes from SBA. Lenders and banks have discretion to implement it, to implement the program and extend it to their clients, kind of with their own methods. So the advice we have for folks that are looking to apply for this program is to start with your own bank who you have a relationship with, but also we have a list of lenders who participate on the SBA.gov website. The way the program works is a lender will make a loan to pay up to 8 weeks of your payroll costs, including benefits, and that those funds can also be used to pay interest on mortgage, to pay rent, to pay utilities. 75% of that loan needs to go towards a payroll cost, but those other 25% can go to those other categories. And when we're talking about payroll costs, that includes salary, wages, commissions, tips, employee benefits, and state and local taxes that are assessed on compensation. And the purpose of this program is to keep employees on the payroll, and the program is backdated to February 15th. So if you already have been keeping people on payroll, you can include those expenses. You can use this loan to pay for those expenses you've already incurred in those categories. And if you rehire, if you've already let people go, if you rehire them quickly, you know, those you can use. You're not penalized if you've already let people go. Actually, is sort of the headline on that. And for the details in terms of businesses that are eligible to apply for it, all small businesses, also nonprofits and veterans organizations, sole proprietors and self-employed individuals, and independent contractors can apply. For sole proprietors and self-employed individuals and independent contractors, the program will start accepting applications from those business owners on April 10th. So right now, if you're in any of those other categories, you can start working with lenders immediately, and then April 10th for those other 3 categories. In terms of what that financing looks like, it's a loan that can be up to $10 million. The way it's calculated is it's 2.5 times your payroll cost. So that's the size of the loan that your business is eligible for, up to a maximum of that cap. If after that 8-week period that I mentioned, you know, if you've made those expenses and you've spent the funds you've received within 8 weeks of having received the loan on those eligible categories, the loan's forgiven. You don't have to pay it back. And if you don't, you know, what it does is it converts into a regular loan if you don't meet those conditions. And that the terms of that regular loan are that it has a 1% interest rate. It has a term of 2 years. There's no fees or balloons or, you know, or anything to that effect. And your payments are deferred for 6 months, so you wouldn't have to make a first payment until 6 months had passed. On this particular loan, you don't. There's no collateral required. There's no personal guarantee required. And yeah, there's the link to find lenders that are eligible to issue the Paycheck protection loans. So that's like the really fast. I know I breezed through that. We're gonna come back. We're gonna open up for questions, and I'll take some of those. But I want to save some time and hand it over to Susheel to talk about our economic injury disaster loan.
At a very high level, $2 million statutory maximum, 2.75% for private nonprofits, 3.75% for businesses of all sizes. No prepayment penalty, $100 UCC1 filing fee with the states, and no other costs involved with this particular loan. And the traditional economic injury model applies. What does that mean? It basically means that the normal course of business for the bills you incur for product and people is what this installment loan covers. So anything on your accounts payable side of the equation is what you're going to use this money for: rent, mortgage, people, product, and everybody else. In terms of disbursement, it's 6 months worth of working capital immediately deposited into your bank account after you've been approved. Could someone put that on mute, please?
By me.
And after that, the money is the deferment starts immediately, 12 months before your first payment is due. No personal guarantees up to $200,000. Anything over that is personal guarantee accepted and needed. And we look forward to getting the applications from those business owners that want the complete working capital requirement needs met. COVID-19 relief.sba.gov. There are radio buttons, 8 of them on the first page. Pick one that fits your scenario, including independent contractors, including people who are sole props. Certify that you're not involved in any type of illegal business. Make sure that you're not. And after that, answer the questions which are posed. The new feature that we added to our website was an advance for up to $10,000 that you're able to potentially get an advance on to pay your payroll and relieve some of the pressures associated with it. And the mathematics behind it is $1,000 per employee. There are lots of folks who are out there who are trying to say, hey, I just want to get a forgivable SBA grant. Well, there's no such thing. If you're not approved for the loan for some reason, then the loan advance that you sought becomes forgivable and you have no need to repay it back. That's pretty much the gist of it all. That's my program in its nutshell, and I look forward to entertaining questions.
Okay, well, thank you. You guys breezed through a lot of information there really quickly. So I want to remind everyone that if you have questions, you can post them in the chat box and we'll address them one at a time. We also have an email that is dedicated for the City of Fremont businesses if they have any questions related to COVID or just anything in general. So I'll share that email with you now for folks on the phone. It is econdev@fremont.gov. That is econdev@fremont.gov. So please, if you have any follow-up questions, anything that wasn't touched upon today, we're happy to follow up with the folks at SBA and get those resources for you. So that being said, I'm just going to start reading a couple of the questions that have already come in here. So Madhavi asked, Wells Fargo has not started accepting PPP applications. Have other banks started the process? Will there be a delay in the process or refusal of loan if the bank is late in accepting applications?
Right. Yeah, that's a great question. It's one that I'm getting from a lot of folks today in terms of process. So like I said, this morning SBA opened the program, and the way because the PPP program is being delivered through banking partners, and every single bank is different. Some banks were Johnny on the spot and they were like, okay, we're ready, give us your application, and they started filing immediately. Others are still standing up their process for how they want to take applications and how they want to process them. So the advice that I have for folks right now is start with your existing bank that you work with and ask if they participate in the program. But then on our website, we've got a list of banks that people can go to. In terms of timing, that 8-week time period that I mentioned, that clock for spending those funds starts as soon as the loan is issued. It's not 8 weeks from today, and so if your bank is taking a little bit longer to get their process in order, you have the option of going and finding another banking partner that is moving a little faster, or you can also, if you feel confident that they're going to stand up their process quickly, stick with them, and then that clock will start as soon as funds are issued.
Got it. So the Fremont Chamber wants to know if 501c6 organizations will be added.
I've not heard anything about 501c6s being added, so 501c6s for anything I'm aware of at the moment, as of timestamped today, they're not eligible for the PPP program.
Got it. So, we have a couple of different loan products here that are being offered, and I think it'd be helpful to clarify whether or not people could apply for both, if there's any potential ramifications in doing so, and if they're eligible to receive both loans.
Yeah, you can absolutely apply for both loans. You're eligible to receive both loans. The advice and guidance around that is that it's better. The PPP program is designed for payroll costs. That's why it says 75% need to go towards those payroll costs and 25% towards kind of those other categories. And so we're talking with folks. If you receive both loans, they can't be used for the same expenses, and they generally shouldn't be used for the same category of expenses. So the broad guidance is to say, well, PPP, it's designed for payroll costs, keep it for payroll costs, and then those other costs that you might have, use the EIDL loans for those other business expenses you might have. Just make sure to keep those categories separate.
And I just want to make clear that this PowerPoint, we know it's okay if we disperse it with folks. Okay, absolutely. So because we weren't able to capture everyone's email addresses who's on the call, if you would like a copy of the PowerPoint presentation, please also send an email to econdev@fremont.gov, and we'll make sure that we get that to you. We'll also
Donovan?
Chamber as well. Yes?
Is that the PowerPoint that I sent to you and to Noah, or is it something else?
It's one that I've got, Susheel, okay. So I'll send it down.
Okay.
Thank you. So Bill Harrison asked if we could just go back. It's the $10,000 advancement for the economic injury disaster loan. If you could kind of touch upon that. I've heard it referred to as a grant or forgivable loan. If you could kind of explain that again, that would be helpful.
All it is an advance, potential advance against a loan amount that potentially will be approved. So while you're applying for the loan, there's a question at the very end of the application where it asks if you want to be considered for an advance of $10,000. If you mark off yes, they'll immediately put the money into your account within the 3 to 5 days. If for some reason you're not approved for the loan, there's no obligation to repay the sums of money that you're advanced. If you are approved, then that $10,000 is an initial advance, and then the remaining proceeds will be dispersed as far as the loan amount is concerned. So let's say you got approved for $50,000, 10 was already advanced, then the remaining 40 will follow. If the whole loan gets denied, you have no obligation to repay the 10. If the loan is approved, there's an expectation that you pay back the 50.
Got it. Thank you. So let's see here. we've touched upon, so there's a list of banks available that have already committed to participating in the PPP program. And so we'd encourage folks to visit that website to get a list of banks. And, if there is, if your current banking or, lending partner is not listed, there should definitely be a number of financial institutions in your area that can provide those types of loans. Let's see. So Express Gas asked, are we looking at an average of the last 12 months for the PPP loan calculations? I'm assuming that's for payroll. What do we need to send SBA for verification of the requested loan amount?
Right. So for the PPP loans, please don't send our office things, which is just to say that SBA isn't the one that's issuing those loans. That it's for the PPP loans, that's through a commercial bank lender or partner, and they're the ones that process the applications and any documentation. When you're applying for those loans, some sort of payroll documentation is going to be asked for by the lender. The way that we ask the lenders to do some very, very minimal, payroll documentation, but it comes from the lender on that side for that application. In terms of making that calculation, it's your past 12 months of so you aggregate your payroll costs from the last 12 months for your employees. And one of the complicated items with this is you need to subtract any compensation paid to an employee in excess of an annual salary of $100,000. And then you calculate an average monthly payroll cost from that. So you divide whatever that was by 12. And that's your average monthly payroll costs. For that kind of, that particular, calculation is built into the application, the paper application or the sample application that we have up on our website. And we also have that in the rulemaking that we published on the program last night. So I'm happy to send out those links as well.
Thank you. So Sunny asked, under the EIDL, so the Economic Injury Disaster Loan Program, we have obligations coming up for products we have already purchased, but are holding, but I think the vendors are holding up the shipment to them. Can they use this program to pay for the inventory? And see, he says that he understands that there's 200,000, that less than 200,000, no guarantee is needed, but if more, what kind of collateral may be required?
So before to this particular question, the website for further guidance on payroll costs that you just asked, Donovan, is on home.treasury.gov. There are 4 links that you could choose from: a macro view, a lender view, and a borrower's view. And last but not least, an interim final rule that you can click on, and it talks about eligibility and how to calculate payroll costs and what's included and how-tos. So if you want to take a look at it and attach it to your presentation, that'd be great.
Yeah.
Now, as far as the other person, and as far as the person's question is concerned, the personal guarantee and collateral have nothing in common. Any loan amounts over $200,000 is basically we're guaranteeing the loan. Below it, nothing's required. No collateral for $500,000, up to $500,000, and you can use funds to pay current accounts payable which are due, and delinquent payments which are due, as long as you can trace the line between injury, in other words, February 1st, and later are the ones we're looking at. If it was, before February 1st, then it had nothing to do with COVID-19. So it has to be tied to the injury period.
Got it. Thank you. So Hubs 510 asked a question that's kind of encouraging. So does the PPP program qualify for hiring new employees if there are businesses that are increasing their employee count?
I mean, yeah, yes, it does.
Good.
I mean, what we want to see is that folks are employed, that so we don't go and see who is employed prior. We want to see that it's going to payroll costs, basically.
And these would be W-2 employees, correct? Or would this also include contractors?
Contractors are eligible to apply for the PPP themselves, and so it's the interim guidance that they have up on Treasury.gov that Susheel mentioned has a real breakdown under what they mean by employee. But the high level item is that independent contractors can apply for the PPP for their own individual businesses, including sole proprietors.
So unfortunately, when this the COVID shelter-in-place order started going in, a lot of employers had to immediately start reducing their headcount. And so for employers that have already laid off or furloughed workers, can you kind of touch upon again how they could still qualify for the PPP if they were to bring workers back? Can you explain that dynamic a little bit, Noah? Sorry, I think you're muted.
Gotcha. Sorry about that. Yeah, so the PPP is looking at payroll costs. It's not necessarily looking at the specific individual. And we want to see that the 75% of those funds are being expended to go towards payroll costs. The intention is that that you go back and rehire folks, but the way that this program is structured is it's not tied to the specific employee that may have been furloughed or let go. If that employee was furloughed or let go, you can backdate those expenses back to February 15th. So like I said, if you'd been keeping people on and paying them during that time, you could use it towards those expenses you'd already incurred. Or if you brought people back on and made expenses towards payroll that were for that time that they weren't on, that could also be an eligible expense. Or if you brought on a new person, I mean, so long as it's a payroll expense.
Thank you. So Anoop asked, is the loan approval for the Paycheck Protection Program provided on a first come, first serve type of basis? Is there a possibility of that pool of money being running out?
I'd say yes and yes. Well, there is a cap on the amount of funding that is available for that program. It is delivered on a first come, first served basis. At the same time, like if it hits that cap, SBA would have to go back to Congress to ask to have the cap raised, I guess is what I would consider that. So it doesn't mean that it's, it is absolutely finite and it's over when it's over. But when that pool is exhausted, SBA would have to go back to Congress to authorize an expansion of the program.
Thank you. And so for businesses that have already applied for either the disaster loans or the PPP loans, the waiting period between when they apply and when they hear back, is there anything that they can do to kind of check on their status, or what should they expect?
I'll let Susheel answer that for the economic injury side.
Just to cover it in a big picture standpoint, Donovan, both these capital access programs are meant to assist the needs 8 weeks at a time for PPP, long-term for economic injury disaster loans. Suggest tapping into their available lines of credit. Every day, whether it's the Wall Street Journal or the business section of every major newspaper, you find that corporations are tapping their liquidity. That's the measure of uncertainty we're having. Everyone's tapping into a line of credit to keep themselves vibrant and afloat. And you can always pay those expenses back with our economic injury. In terms of checking on status, the $10,000 advance should be in your bank accounts fairly quickly. I've spoken to quite a few business owners across the country. I cover the territory of Texas and Louisiana and Oklahoma, and I've talked to several business owners who applied on Monday and that I've seen their monies as of today, so it's fairly quickly. You'll get a reference number too. The economic injury disaster loans are being funded within 2 to 3 weeks. So those reference numbers you could use to call back at the 1-800-659-2955 number to get a flavor for what their wait times might be. But in the meantime, apply for the PPP with banks that are willing to take your application, want your business, versus give you the runaround. There's an approved 7(a) lender list that I believe Noah's sending out. And after that, it's a matter of figuring out how to stay operational, solvent, paying your bills, getting your people, because what you want to do with our proceeds is pay your people, pay your vendors, pay product, and be ready so that when the order comes, reopen, you can hit the ground running and not worry about past due accounts receivable or whether your people have been paid or not, or if they moved on.
Thank you. And so for either the disaster loans or the PPP loans, are there any kind of common overhead expenses that these funds could not be applied to? So I'm seeing property tax coming up as a question. I see workers' comp cost. Are there any kind of like common business expenses that wouldn't qualify we should make folks aware of?
I would love for folks on the call to go on the web and pull up our form 2202, Schedule of Liabilities, and then look up the definition of accounts payable. Any and all expenses that go on the current portion of accounts payable are eligible expenses that economic injury disaster loan can and will pay. It's the definition of working capital is current assets minus current liabilities equals a certain number. That number is your solvency number. If you look at your balance sheet right now, if you have current assets exceeding current liabilities, that means you are solvent. If that number is below 1, that means technically you're insolvent. A lot of you business owners may actually have a working capital requirement that your business bank may have put in place. And the only way to have them recaptured and paid is through our program. So if you want to take a look at property taxes don't belong on there, payroll costs do belong on there. So those are eligible expenses. The commonality between the two programs is very specifically payroll. Rent and interest expense of mortgage is another commonality. So if you really compare those two areas, payroll, rent, and mortgage, everything else on the working capital side for the economic injury doesn't go into the PPP. Or in this case, phrasing it even better, may go in the PPP, but may not be forgiven. So if that's the case, you might as well work with the economic injury disaster loan for a longer period of time.
Got it. And so, you know, the SBA has gotten a lot of credit for making the application relatively, you know, straightforward compared to other types of, you know, loan applications that are out there. But, you know, if folks do have specific questions, I know that there are a lot of providers or, you know, even fraudulent people claiming to be kind of experts on this subject that are, you know, advertising services for helping businesses apply for these loans. Is there, if business owners have questions, what's the best resource for them to access?
Go through a credible website such as the Treasury or the SBA. Reach out to the San Francisco District Office. If you guys want to aggregate the questions and have them sent to me, I'd be glad to answer them as soon as I possibly can. But there's no reason for anyone to pay for filling out these forms unless it's your accountant, unless it's your enrolled agent, unless it's an attorney or someone that you trust. Anybody that wants to package this information and charge a fee and send it off, I wouldn't trust my own money with it, but I'll leave that up to the business owner to decipher that. What do you think, Noah?
Yeah, no, that's absolutely, great advice. Don't let people charge you, to fill out these applications. SBA is, there's no cost for that. In terms of assistance in navigating the applications, I think what I would add on to that is that SBA funds a couple networks of nonprofits that provide one-on-one assistance to business owners. And these networks right now are doing a lot of work with helping folks package their applications and walk them through the application processes. So the two networks that are really gearing up in a big way and are serving a lot of clients right now on one-on-one assistance are the Small Business Development Center network. So there's one Small Business Development Center in every single county in California. So in the Fremont area, it's the Alameda Small Business Development Center, and the other one in the area of these participants is the East Bay SCORE chapter. And both of those networks are they're working with business owners on a one-on-one basis, helping them go through these applications. And it's no cost consulting. It's I say it's prepaid. It's taxpayer funded. Very paid for these services. You should take advantage of them. And they're serving clients right now.
And I'll add to the resource partner list there, Donovan. They're what we call women's business centers. We've got VBOCs, which are the Veterans Business Outreach Center, in addition to the SCORE chapters and the Small Business Development Center. They are what we call our resource partners with the district office and the Office of Disaster Assistance. They're taxpayer funded, so there's no fees to go see them and talk with them. And they'll be very happy to not only help you package the information together, but also help you with business plans, help you get certified for government contracting, help you with potential future needs, feasibility studies, so on and so forth. They're a very valuable resource for a business owner in the community.
They're doing a lot of work right now with credit repair and cash flow management as well, because that's a big need for business owners at the moment.
Thank you. We really appreciate that. And that is a good time to actually plug the Alameda County Small Business Development Center, which is located in the Tri-City area at Ohlone College and the Newark campus. Right now they are remotely helping businesses apply for these SBA loans. And so we encourage you to reach out to them for any assistance that you may need. We're happy to, thank you. Someone from the chamber posted that here for us. So please look at the chat window for links to those websites. So just going to wrap up here. One other question I saw that I think would be good to address. So if people want to, so let's say either a business realized they made an error when they filled out their application, or their situation has changed pretty, significantly since they originally applied. Can they make an edit to an open application, or do they need to resubmit, or what's the best process?
The questions which are posed on the economic and disaster loan most probably will not require a change unless there was First of all, there's no way to change it, unfortunately. So I'll start off with the answer would be no. A lot of the questions posed there would be, what was your revenue from last year? So that would come off your income statement. What is your cost of goods sold? That would come off your income statement. What is your ownership? That's 100%. If it's less than 100%, at the time of the incident, you'd have to, I mean, there's so many different moving parts of it. The best way I can answer that is no. And if when you get the phone call and the email saying that they need more information, that is the best time to indicate that there was an error on the application.
Got it. Thank you. Okay. Well, I just, want to be mindful of everyone's time here. So just again, we've posted in the chat window the econdev@fremont.gov email. Please send us any questions that you have. We will make sure that we follow up with Noah and Susheel and get an answer to your question. If you would like a copy of the PowerPoint, please also send us a quick email and we will make sure that you get that. Noah, Susheel, I don't know if you guys have any closing thoughts or anything you'd like to share.
The remark I'll make is please apply for the economic injury disaster loan. Look at the language at the home.treasury.gov about what part of it is required to be used for payroll expenses and everything else. Compare the two. Work with your lender to get those funds. Seek assistance to the resource partners. And of all things, this is unprecedented by any stretch of the imagination. Don't fall for innuendo, rumor, or suggestive language. I've gotten all day long nationwide, I've heard about money's going to run out. No, money's not going to run out. This is backstopped by the Federal Reserve. When you have the Federal Reserve backstopping the Treasury, it means that we're in good shape. The lender of last resort has made a blanket sweeping statement. So uncharted territory, bear with us while we work through our applications. Funding is fairly quickly. Apply for the advance if you already haven't, and look forward to serving you and the needs of the Fremont and the Tri-City community fairly soon. Thanks for having me, Donovan and Noah.
Yeah, thank you so much, Susheel. Yeah, I don't have much to add onto that, except to say that in this moment that everybody's in, that we're all going through with not only with a lot of unprecedented programs being put into place, I'm also encouraging business owners to kind of keep their antennas up and continually refresh what they've learned on almost a daily, weekly basis. There are other programs from the state of California, from local cities, from nonprofits. So those are items that, I can't speak to those programs, but I'm seeing them pop up all over California. And as business owners right now, being very engaged and continually refreshing what you've learned on almost a daily, weekly basis is just good practice in this particular moment.
Thank you. Well, with that being said, I just want to again, thank my colleagues at the City of Fremont Economic Development Department. We're here to answer any questions and be a resource to the business community here in Fremont. Thank you very, very much to Cindy, Napoleon, Matt, and everyone at the Chamber for just everything you guys have been doing in this very challenging period to help businesses navigate through all of these different programs and requirements that are coming online. So it's really been encouraging to see the community coming together. I just want to wish everyone, good health, and we're going to all have to kind of pull together here to get through this. But it's been, very, very encouraging to see all the community coming together. So thank you again. I believe, Cindy, will we be able to make this recording available if people would like to have a copy? Do you know?
I believe so. Napoleon, can you answer that?
Yes, we will have it up on our Facebook and our fremontbusiness.com, and we'll share the link to it with economic development.
Right. And then in addition to that, though, I just want to add quickly, there are a number of resources on our website too, in case you're looking for links to different resources. You'll find all kinds of information there as well.
Thank you. Okay, well, everyone, please take care, stay healthy, and we will talk to you soon.
Thank you, Donovan.
Thank you.
Donovan.